Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our podcast series. And for those of you who are new to Crux Investor, please click the button in the corner of the screen to subscribe to our YouTube channel. We're talking today with Anthony Milewski.
Thanks for having me back again.
Yeah, it's good to have you. We had a good chat last time.
It was great.
No, a few things have happened.
Yeah, one or two.
One or two. So why don't you tell everyone what's happened?
Yeah, no, look, since we were last in here, Paula Investments has made a bid for the company, and with that bid, there's a spinco that will spin out some of the nickel assets into a public company, Nickel 28. And it's really kind of unexpected.
28th on the periodic table.
Yes, exactly.
Really
Cobalt 27,
clever.
Nickel 28.
Really
right?
clever.
So what does that mean for copper in the future?
Yeah.
So it's an interesting time. A lot going on corporately. As the circular's prepared in the coming weeks. Ultimately, the circular prints, I think, in probably call it 3 weeks, and then the shareholders vote. Probably mid to late August.
Okay, well, we should get together around that time so you can sort of get into the detail. That would be fantastic. So why don't we kind of keep it broad? You did offer last time we spoke to kind of educate us about the marketplace. So why don't we start with cobalt? Obviously, it's had a bit of pressure on it recently. So what's been going on?
Yeah, so cobalt, a year ago was $44. Today it's probably $13.50 to $14. Right. I think the outlook for cobalt, my view of the outlook for cobalt is it hasn't changed. I mean, incredibly bullish. Timing, of course, can change, right? And so I think there's a couple key factors that have impacted the cobalt price. One of those is simply the DRC in Congo. And,
right. What's happening there?
Well, what we saw was artisanal miners, which is literally someone showing up with a shovel. Very hard to control last week. Glencore, tragically, 36 illegal miners died. So, so artisanal miners effectively are just digging up the material for their own kind of account, and then they
remind us why you think that's not necessarily a good thing. So obviously they're looking after their livelihood, but what's the impact? Just remind us.
Well, there's a few kind of aspects of that. One is simply health and safety. If you go dig a hole and it's not engineered, it can collapse. So that's part of it.
Yeah.
Another part is just environmental damage. When you don't have a feasibility study, when you haven't properly engineered it, you can cause significant environmental harm. And then I think the third and the one which has gotten the most attention is, of course, child labor. Right. And we need to be clear, not all artisanal mining is child labor. Those are two separate issues, but all three of those are key issues. And so what we saw was when cobalt ramped up into the 40s, a wave, kind of tsunami of cobalt came on. Now, what we've seen on the way back down is that cobalt, that incremental artisanal producer, really dies out of the market probably in the high 20s.
Right.
And so, kind of around $29. So right now, artisanal mining has really slowed down compared to the peak at $44. But you have a pretty significant amount of material from that kind of period that's not able to be consumed yet just because of, one, origin, but two, the market's not there for it. And then I think you had deleveraging in China. And what that means is consumers of materials for your investor, or excuse me, for your listeners, consumers will carry a stockpile and then they'll borrow against that for working capital. And if for whatever reason like interest rates hike or something like that happens, they'll reduce their stockpile to help manage their working capital. So you had deleveraging in China and the artisanal material, and what you've really done is created a situation where there's a surplus in the market temporarily.
Right. So by deleveraging, just to help everyone with the terminology here, you mean the Chinese running down their stock? What do they see that we should know about?
Yeah, no, I think what the read through was just the cost of capital. So this is very much you're a business and you're borrowing against your stockpile, and there's a cost of that borrow, whether it's 2% or 7% or whatever it is, right? And that's just part of your working capital. And so deleveraging in this context means they're reducing the amount that they have borrowed.
Right.
And a corollary to that is a margin call. So at $44, the amount you can borrow against this is one thing. At 14, it's another. So it's really, we're talking about managing capital structures. So that put a whack of material into the market. And then I think really, and most importantly, Congo put a whack of material. And then, of course, the final factor would be, new mine ramp up and increased output.
Right. And so, okay, quite a few moving parts there. But in terms of the total size of the market, how much does China, DRC represent?
Yeah, so The official market today is around 110,000 metric tons.
Is there an unofficial market?
Well, I would say that the Congolese material that's artisanally produced
Right.
is definitely unofficial.
Right.
So I would say the consumed unofficial market, and no one knows for sure. I mean, you
Right.
can look at export data,
Right.
but it's probably not that accurate.
Right.
Is at least another 20 to 30,000 metric tons.
Right.
However, the amount produced in that run-up period could have been, and most likely was, materially higher than that.
Mm.
And so it's interesting because actually, if I had sat here with you and projected EV demand today at the time of the IPO, what I would tell you is we were wildly wrong. We were too conservative. So the demand has actually outpaced any
Right.
analyst expectations. It's just that on the supply side, there's been some bumps that probably mean that cobalt is less interesting for the next 3 years. Although ultimately the demand side is intact and more bullish than we've ever seen.
So that's got to be quite scary. So you're saying we were wrong, but in a good way.
Yeah, on the demand side, we
Right.
underestimated demand. That's true.
Yeah, but so we let's do that. Let's go back a couple of years. You're saying, right, we're doing our projections. Cobalt is the thing, and I remember these conversations from brokers. They were like, "Have you got anything in cobalt in Africa?" So I've done a lot of work there, and that was the big thing 2-3 years ago. And you must have been having the same sorts of conversations then. And you think cobalt battery market correlation and nickel, huge correlation. This has got to be a good thing, right? But obviously, the market's come down. It's gone from $40 down, and you're saying that's entirely due to Chinese DRC actions, things you couldn't predict.
Well, I mean, there's also an element of legality, right?
Right.
The material, in particular material like the child labor conflict material in Congo, it's a very complex issue, right?
Sure.
For instance, your refinery in China, even if 9 out of 10 of your sources are legitimate, if the 10th one isn't, and you just commingled all the material, atoms are atoms, and it's all mixed now. And so I think that what I thought on the front side was that ultimately automakers, but also really consumers and battery makers would demand a higher level of kind of transparency in that supply chain. And that's definitely started to happen.
Right.
But I think the lack of supply chain transparency allowed for a huge amount of artisanal production to come into the market. Now, there's been so much fuss. There's been a great Wall Street Journal article 6 months ago, and the FT's done some work on it. And I think they've kind of brought this issue to light. And there are a bunch of different groups working on ways of maybe using blockchain or like a Kimberley-style process, but that hasn't happened. And so I think the lack of that process allowed for a huge amount of artisanal to come into the market that was not anticipated, because I don't think most people really believed that like their phone, cobalt in their phone may have been dug up by a 9-year-old boy. I mean, this is pretty tragic.
Yeah, for sure. But, those things are driven by a number of factors. Someone's got to pay for the building of an AI or blockchain solution to be able to do this tracking. Is it necessarily in each of the relevant companies' interest or the industry's interest to do that? Because there's another overhead in a time where it was quite tough, right? It's also, and I think we touched upon this on the last time we spoke here, is these things are driven by, in other sectors, these sort of, whether it be environmental or otherwise issues, are driven by marketing initiatives and go, well, this is a point of differentiation for us. So if the automotive industry would need to push this harder, the Chinese would need to push this harder.
Yeah, and diamonds is the example, right? With
Absolutely.
With diamonds, and also tin is another example of that.
It has been. So, what's got to happen? What's got to give in this space? Because it's a big issue. It's one of the first things.
Well, look, I think one of the issues was the automakers said, "Oh, this isn't our problem. This is really the battery maker's problem." Right?
Yeah,
I think that was initially I think that was initially the case, and so ultimately the consumer, with all the reports in media, I think is saying that, guys, this needs to be custody needs to be able to be shown all the way back to the mine. So I think the consumer is now driving that, and the automakers are kind of unable to just throw their hands up and say, well, it's not us. Yeah. And so you are starting to see some of that accountability flow all the way through. But I think it's such an esoteric thing, including lithium, but different issues. These are industrial materials that the automakers, by and large, had not used historically, at least not in large quantities.
Right.
Unlike, say, copper or aluminum. And so I think they didn't know what they didn't know.
Well,
and so that was part of the learning curve, and all these factors which were hard to foresee created a scenario now where the market's probably quiet for a few years, right?
Yeah, because I look at another space. Okay, plastics, recycling of plastics. Okay, huge push from the public. Lots of PR around it. So David Attenborough talking about it at the Economic Forum recently. I was listening to an article the other day about the UK. We ship a lot of plastic over to Turkey to be recycled. Okay, so forget the carbon footprint issue there. It gets to Turkey, only 30% of it gets recycled. The rest of it's landfill. We've just moved the problem because of what you're saying. There's no tracking, there's no accountability. But the public feels there is. They're filling up their recycling bins with great pride, but there's no accountability in terms or visibility of where that goes or what happens, and therefore no one cares.
No, I think it's a great observation, and I would just say the whole green revolution is intensely complex.
It is,
and displacing coal is great, and we're doing that, but you also have to think, okay, what are the implications of whatever the other things are that we're mining, and what are the products we're making, and can you recycle them? So it's intensely complex in a world with regulatory environments in every single country. Mm-hmm. So look, hopefully the WTO and some of these global organizations are working on initiatives that can actually be implemented. Mm. But I actually think that's why the consumer hopefully puts out the demand, because if the consumer buys the car, they're voting with their pocketbook, and that would be the most effective way. And so I think the way that the consumer does that is through, and like I said, there's a guy at the Wall Street Journal who's covered this really well. By making that information available to consumers, I think that they're ultimately voting with their pocketbook, and if they're not prepared to buy a car because the basic materials custody isn't shown, then that's a plus. So on a practical level, that's why I think it can kind of manifest itself.
Yeah, okay. But I would argue with the plastic example, they're voting with their pockets to a point, and then it gets grey.
Yeah,
very grey. Conversation for another day.
Yeah, no, but it's a good observation. Like, it's not perfect, and we have 100 years now of carbonization,
right?
Of intense carbonization around the world. Yeah, and hopefully it doesn't take 100 to decarbonize. Otherwise, you might find that our great grandchildren don't have a place to live. But I do think that that these are intensely complex issues. But the technological advancements are happening at an accelerated pace, right? And the battery revolution that's happening in stationary storage as well is changing the economics of renewable energy. And so I think it's all positive, but there are definitely going to be speed bumps, and we shouldn't forget that some of these industrial minerals are coming from tough places, and we should examine how they're being mined. Yeah. In the case, by the way, to be clear, in the case of like a Glencore or these more mechanized mines, I think it's pretty transparent how that's happening. I think it's okay. I think where it's more complex is in a poor country like the Congo. Artisanal mining is not universally illegal. There are artisanal mining claims, and so it's breaking down that issue into the sub issues around child labor and environmental and permitting. That's complex and maybe beyond the reach of someone who's casually thinking about buying a car.
Right. You're one of the smartest guys I've interviewed, okay? You're a bright guy. If we look back to 2 years ago, what would you have done differently then? What would you have demanded of the companies that you invested in back then, which may have changed because we've all got a role to play in this, okay? The public has got a role to play in it, but you're one of the guys at the front of this. You're in the mining space, right?
We definitively did not invest a single penny and have not invested a single penny in the Congo.
Right. So that's one thing.
And right? I think that's the key. That was really
that's a big thing.
That was the big thing because if you look at the trouble that Glencore's had, and that's a big cap major company. Yeah. The feeling was always like, well, how are we going to do it if they can't do it? So that's avoidance.
Of my question?
It's a sin. No, it's a sin. It's a sin of omission versus a sin of commission, right?
Right.
What would you do differently without being able to predict the price?
Sure, of course not.
Maybe one of the ways would have been to get involved at the very beginning and bring to the forefront that artisanal issue. Yeah. Such that
be a voice.
Be a voice in that,
right.
Because I think then maybe the demand for that material wouldn't have been there, and so you wouldn't have had as much of it come into the market.
Yep.
To think you would have stopped it is impossible.
Of course.
But at least if you had the battery makers, the Umicore's, the Panasonics, and saying from the outset, like, we don't want that material, we don't care how it comes to us, if you had that from the beginning, maybe what would have happened was less material would have come out of the Congo. But it's really hard to say, because the flip side of this is you're an individual, you don't have a livelihood, and someone presents you with the way to make whatever the number, I don't know if it's $20, whatever that number is a month, and that's your only livelihood. Like, it's pretty darn hard to turn that down.
Of course.
And so that's why these are intensely complex kind of.
No, I get it. I don't think one person fixes it all, but it's a case of we all have a role to play. So people like you more than most. So okay, you can't predict the future, but you can learn from the past. So you're obviously getting into a new venture. We'll talk about that in a few weeks' time. In terms of what that structure is and what it looks like. Are there things that you've learned? I said you're smart, but are there things you've learned in the last 2 years which you think, well, I'm going to look at the market differently. I'm going to look at my company differently.
I think there are interesting things to take away from it, which is, in a commodity like a nickel or a copper, where it's a much bigger commodity, I think you have more efficient pricing mechanisms.
Yep.
Right, and just with more liquidity, I think the market is more efficient. And in a cobalt, but not just a cobalt, in a lot of smaller, more thinly traded metals, it's more complex, that pricing dynamic.
Well, I've been interviewing a few uranium people who definitely agree with you on that one, but there are many.
right. I mean, and so I think one of the interesting things that I observed is even like the difference between cobalt and lithium. So if you look at globally, I mean, there are how many lithium projects out there that are interesting? There are plenty. And consequently, there's enough market cap spread among a variety of players to allow for proper analyst education.
Right.
And for a sell-side community to really fully understand lithium, or to really understand it at least a pretty high level. Like they get the pricing, and it's industrial, and it's a chemical, and hard rock versus. So they sort of have that. When you look at cobalt, there's no one else out there because actually there's no such thing as a primary cobalt mine. With the exception of Managem in Morocco. And so what you're really talking about with cobalt is nickel mining globally or copper mining. And what that means is, even though we have a lot of analyst coverage, it's very challenging for an analyst to be fully abreast of the changes because they're not covering 7 copper companies. And with that comes challenges around misinformation. And it comes challenges around ultimately where the equity price is, because buyers don't necessarily have the best information, because it's not like, let's just take copper or even lithium, where I think you have a lot of different data points, and that makes it a little bit easier to come to a more educated view. Whereas with cobalt, for instance, to get one of the main pricing sources, you have to pay. And if you just own $10,000 worth of stock, like, you're not going to buy the service, right? So there's that kind of dynamic, which is kind of an interesting.
That's interesting. But what about you? That's the market. The question was, what do you think you've taken away from the market?
Well, the point is, I think that there is value in liquidity.
Right.
I think that's really the message, right?
Okay.
And nickel, I think one of the interesting aspects of nickel 28 will be that. As chemistries shift, they shift towards a more nickel-rich battery, right? Like, it started off.
Tell us about that, because you did mention it last time in terms of the construct and the different inputs there. So it's going to.
Well, so what's happening is, like, the original chemistry was a 111. Save it for Tesla, which is kind of a different story. But and today it's a 532, moving to a 622 and an 811.
Right.
Like a more.
What are people looking for? Why is this?
So the driver, the driver of the change is simple. It's consumers, because consumers are demanding 2 things: range and rechargeability. Yeah. And so those chemistries are attempting to maximize energy density for range and recharging efficiency. Yeah. And so and ultimately, like, as you shift into these nickel-rich batteries, what they're trying to do is have a car that can go as far or further than current cars, and that's really the size of the battery. size of the battery also equates to cost, the more basic materials you have. And then, right now what they're trying to do is get rechargeability down to be something more akin to a gas station stop. Getting that into that sub 15-minute level would be a big coup.
Supercharge. Right.
And maybe that's not possible. I mean, they're looking at other solutions. In Israel right now, there's a stretch of highway where they're actually, the charging is as you go. So there's different ideas and different solutions. But back to nickel 28, what is interesting about the liquidity aspect is nickel and cobalt are, kind of intertwined, right, globally. And so what you see in nickel 28 is exposure to the producing mine, and you also still retain some cobalt exposure, but you have the potential, I think, for a much bigger story in nickel when the nickel moment comes, right? And that comes as you see not only the ramp up in purchase of electric vehicles, but also that nickel-rich cathode kind of.
Well, that's what I'm asking. So, because we looked 2 years back, you had a view on the cobalt market, which is true at the time.
Which is still the truth, by the way.
Right?
Like everything is true.
It's outperformed in something, but things have affected the price. You think of it from the investor's point of view. It's like, the price was $40, it's now a third of that, and you can't predict these things because, like you say, in a way, the demand has outstripped even your expectations. But the market got hit. So what the learning? You go into the nickel market now, right? So you're making your call today based on the data that's available, and there's changing battery.
Nickel's at the bottom, by the way.
Sure.
This is the moment for nickel.
This is the moment. Okay, this is the moment for nickel. So tell us about some of the hypothesis or the thesis behind that.
So nickel's kind of a 2.2 million ton market, with I would say over 70% today going into steel. It's a steel market, right? Yeah. But that market is really two markets. You can kind of cut that market in half, with half of it really being like kind of an NPI, a nickel pig iron product, and the other half being a class 1 nickel that goes into things like batteries. Yeah. And what the kind of really critical thing for listeners is that the crossover price to create class 1 nickel from NPI is probably double nickel's price today. Right. So there's lots of nickel sitting in Indonesia, but in order to take that and put it into
pig iron.
Yeah, exactly.
Version. Right. Okay. So
in order to take that and put it into a battery, you're talking about a huge capex, and you're talking about the need for a double from here, most likely. So that's kind of the delta, and it's really interesting. What happened in the last nickel bull market was China came in, building like crazy, industrial revolution, right? Nickel gets bid up, and then this new technology came out, which dramatically lowered the cost, right? And I think investors still feel the concern around that, and so what that's done, combined with the fact that HPAL, high pressure acid leach, has been one of the truly great ways to destroy value in mining, whether it's Goro, I think they might be at 6 or 7 billion, 2 billion intended, and Badavi, probably almost single-handedly put Sherritt, almost out of business, right? Like these HPAL cost overruns have been in the, $2 to $5 billion range. So those overruns, and then the experience of creating a process to dramatically reduce costs in the last cycle has meant that almost no inflows have come into nickel in terms of building new production. Yeah. And so it's once again a constrained story, and then you have to subdivide that market, and you say, there's almost no production of any note that I can point you to right now. It's going to be class 1 nickel. Adding to that 1 million tons, it's going to come online in the next 3 to 5 years. Yes,
interesting. We've seen a couple of reports. I mean, what are the sources that people can go to just to understand the nickel market a little bit better?
You can Google. Benchmark has some great, Benchmark Minerals has some great articles that are free. Right. Obviously CRU is great, but I think that's paid. Yeah. That's right. There's been some great analyst reports, Macquarie.
It's worth looking.
Yeah, you can Google it. There's a bunch of stuff out there.
And they all seem to be, give or take, predicting quite significant growth. And ways out, not just short term. The long term for nickel does look very strong,
especially as the chemistries become more nickel rich, and by all accounts, that's how we're going. And the other part, which is interesting for investors, and this was not a criticism of cobalt, but a realization, is that there's a wide range of things you can buy. So you can buy Norilsk or Western Areas, larger cap companies. You could go buy a Turnagain, which is Giga, which is a nickel sulfide. huge undeveloped, 10, 15 million market cap, can easily be 400 or 500 million in the next cycle. Or you can buy something in between, like a nickel 28. And so, I think the ecosystem will be sufficiently large that it will be able to attract much more liquidity across the full spectrum of opportunity.
Right, okay. So let's talk a little bit about nickel 28. Okay, so we've had Cobalt 27. We'll discuss the deal in a few weeks' time when the circular is out. I've made my opinions public on it already. What's the thought around what you're trying to build there with nickel 28? I mean, I'm going to assume Paula is going to be is involved.
I think there'll still be a shareholder for sure.
Yeah.
But I think the key assets in that company, there's really three. The first and most important asset, of course, is the Ramey joint venture.
Yeah.
This is probably the single best producing HPAL facility ever created.
Right.
Right. It's operating above capacity.
Right.
It's almost guaranteed that your watch right there might have cobalt in it from this facility. It's going into all the batteries in automobiles. Major automobile makers sort of end up with this material. So this is a great asset. This is a world-class asset, and it's run by a world-class operator. And so I think it's going to be our job to really tell that story to the market, Justin and I. Then you have a royalty over Turnagain. Turnagain is one of the largest undeveloped nickel sulfide deposits. It's a personal favorite. I mean, I've bought in the market. I think I'm probably own around 4 or 5% of it now, personally, which is fully disclosed. And then there's Dumont. Dumont is shovel ready. However, it's owned by a private equity firm by and large, and what their intentions are kind of not been made public as to what they're planning to do with it. So you kind of have these three assets, which give you.
But it's a pretty big. I know we know it through RNC Minerals, obviously. So we know a little bit about it. It's a world-class asset in terms of scale.
It's a big capex though, right?
It's big capex. So they've got a few things to work at. They've I think upgraded their DFS recently. Made an announcement on that now people are looking for guidance as to what they're going to do next.
Yeah, and that's why Turnagain is great, because Turnagain's capex is more like a 500 to 600 million capex. Right. So you kind of have this spectrum. You've got earlier stage in Turnagain. Yeah. You've got Dumont, which really needs to work out its capex. I agree with you. Yeah. And then you've got production. And the important thing here is, nickel is the primary on all of those, but every single one of them also has the potential or is a significant cobalt producer.
Yeah, you see, that comes back to your strategy with Cobalt 27. It struck me when we spoke last, right? You were trying to, cover a bunch of bases, kind of blend that risk profile, and it sounds like you're doing the same thing here again.
Yeah, exactly, right? and also world-class assets. I mean, if you look at that asset base, I can really arguably only think about one or two other assets, which by the way aren't even available, that are out there for that portfolio. Yep. And so once again, when people buy it, it's going to be an expression of not just the adoption of the electric vehicle, but also the transition in chemistries. Right. You see CATL and some of the others really pushing this 811. Yeah. And Vale has been a big kind of proponent of this. What's going to happen in the nickel market? And so I think as you see that shift, nickel will come into favor in a big way in the coming. I even think by later this year, in terms of people's interests, will come into flavor, but certainly in the coming years.
Right. So people need to believe in the nickel story. They need to believe your model.
They need to believe in the EV story, because this is really still driven by batteries.
But there's okay. So let's talk about batteries for a second, because again, you're great at educating people on these things. So the battery story is evolving. Nickel's becoming a bigger proportion of that story. You've got things like vanadium coming in for these longer storage batteries, where they can take renewable energy and keep it for a little bit longer. So there's a whole evolving universe around batteries.
Yeah, there's a big spectrum, right? Yeah.
There's a lot going on, and there's going to be new technologies as well. There always is.
Yeah. So the way I'll tell you how it looks today. So on the EV side, definitively, I'm unaware of any major push outside of the lithium-ion battery. Yep. So that's electric vehicles. Yep. On the industrial side of electric vehicles, like autobuses and
boats, planes.
I was gonna say with buses and potentially like trucks at mine sites. Yeah. Fuel cells are interesting because you're on a fixed route. Yep. Okay, so infrastructure. So there's that. Yep. And then if you shift over to home use. Yep. Lithium-ion battery is interesting for home use. But then you have all these other applications, like if you want to talk about renewable energy,
Yeah.
the vanadium redox battery is intensely interesting because of its size, its recyclability,
Absolutely.
and also its cycle length, right?
That's fantastic.
So what you're going to see inside of the storage market is a multi-segmented market. And so like let's pretend that you're in a remote place of the Congo. Well, flying in lithium-ion batteries probably makes sense. Let's pretend you're a massive solar wind farm where you can drive a truck up to it.
Yeah.
Well, vanadium redox is probably going to make sense.
Totally.
And by the way, through the cycle, as this is really a transformation as it occurs, you're going to see things like the lead acid battery is going to have its place, and there's going to be a zinc battery, and so there's going to be multiple. Well, the technology exists. There are multiple technologies that will have multiple applications across that grid storage. For instance, if you go to a neighborhood where everyone's house is already built, it's like you probably put a solar roof on and a lithium-ion battery. If you're building a new subdivision, you probably put a solar roof on, have a transformer, and then you have a vanadium redox battery.
Yeah.
And so what you're going to see is unlike the electric vehicle, which is very well set for the next decade in terms of technology, with these applications, you're going to have multiple technologies. And I actually believe, and I wish I knew how to monetize it, but I actually believe that like in America, every single person is going to be an energy trader. And what I mean by that is I think over the next 20 years, everyone's going to have solar roofs. And you're going to be able to buy and sell energy credits because you're going to have battery technology, and people in Arizona are going to be selling people in the Northeast or Northeast energy.
There's a little bit of that going on. And we've had conversations with traders here in Europe about trying to build up an ecosystem around that where they can trade across borders.
Well, right now
so.
in the States, you can actually, depending on the utility, you actually can sell. It's a two-way meter. And you sell in and you draw out.
Yeah.
But I actually envision something very different where this technology is advancing so quickly that and maybe it'll come in the form of a token. Like I don't know what it'll look like, but we're all going to be If you own property, you're going to be buying and selling energy like as a personal trading thing. So I think that these are the evolutions that are going to go. But a key point on the vanadium redox battery and batteries more generally. Is, and I don't know how close you're following this, but it's dramatically reducing the cost of green energy. And the reason is because if you couldn't store the energy, then there were times when you couldn't put it into the grid.
Yeah.
And so now with batteries, you're able to balance that out more.
Yeah, smooth those curves.
Exactly, and push it into the night, or draw from the night and put it into the day. You're able to do different things.
It's more constant stream.
Exactly.
Yeah. That's very exciting. Actually, another the opposite view of that yesterday put to me by someone was that a lot of this renewable energy is actually prolonging the life of fossil fuels in a way, because there's so many different solutions out there which have their own issues. I think this guy was referencing wind, for instance, or solar.
Is this a uranium guy?
He may have been a uranium guy.
I
said you were clever.
I'll tell you, the uranium thing is interesting, but unfortunately for folks, the problem with nuclear is, and it's totally irrational because if you look at the number of deaths in coal mines versus nuclear, it's not even close. But people are emotional, and when something goes wrong at a nuclear power plant, it's scary. And it's a huge media event, but I agree with the premise that nuclear would be the cleanest form of energy, and maybe they're able to kind of figure out how to make it safer. Although they would argue it already is extremely safe, and factually they would be correct.
I would agree. It was kind of an interesting conversation because everyone talks about what's happened in the Cold War and weapons and the fact that the difference between nuclear for power versus nuclear for weapons is such a significant difference in terms of the enrichment process, but. It is a clean energy, zero carbon. I think they would push it, not quite, but pretty much. But the thing that people really can't answer the question on, including the uranium guys, is where do you store this safely? What do you do with the waste? Some people say you can prolong it a bit and you create more energy out of the waste now with new technologies. They've got much longer life reactors, but what do you do with the waste? I think that is the bottom line that needs to be answered for people to get comfortable.
I think don't they turn it to glass? I remember
glassification.
I grew up in the
Concrete.
Northwest near the Hanford Nuclear Reservation,
right.
And they had a facility there. So
there's a bit of that, but people still there's an education process that needs to kind of go on, but that's for the uranium guys to deal with,
exactly.
not us.
But I would say that I kind of reject this idea that like somehow this is positive for coal. I think it's a false narrative.
I'd agree. No, the numbers I've seen that's declining.
Even if for a different reason. Look at the mandates of endowments and different investment pools in America.
It's problematic for sure.
Yeah, like they're saying, you cannot invest in companies that invest in coal, or you can't be more than a certain percentage. And so, on the one hand, that will create some opportunity for some hedge funds to make a little bit of money. But the reality is that will hasten the decline of coal companies or of the use of coal, because it just won't be bankable.
Yeah.
Coal's not going away tomorrow. But we're in China all the time, and what I see in China is a real demand to clean up the air, specifically the air quality, and this requires burning less carbon next to major cities.
Well, they've also just created, I think, the world's largest. It's like a vacuum cleaner, which is a large sort of tower which sort of sucks in and filtrates the air. It's fascinating. I mean, they are dealing with it, but one for another. Just very quickly before we wrap up, you said there, vanadium, fascinating, really interesting. How interesting? Interesting enough for nickel 28, or are we just a nickel company?
It's just a nickel and cobalt, but I would say that the vanadium, there's two things about vanadium. I think the technology is interesting. It's not been rolled out and commercialized in a kind of a broad scale yet. And I think, what will be interesting is to see what happens with vanadium price. And by the way, vanadium is similar to cobalt. Yeah, exactly. There's steel, and then there's two types of vanadium.
90% and 10%.
Yeah, and so I think before it gets commercialized in a large scale, I think people are going to have to figure out if they feel comfortable around the pricing and if they're able to get that material in large scale. Now, with cobalt, for instance, I will tell you that because cobalt is sitting at high 13s now, low 14s, there's almost no discussion about substituting it out. I mean, it's kind of that conversation has died. Now, the transition in cathodes is still happening, but that's not being driven by cobalt pricing.
Right.
And so with any of these new technologies, lead, zinc, one of the big factors would just be the luck of the draw on what is the commodity price when it gets rolled out. Because now that lithium-ion is dialed in and that nickel, manganese, cobalt chemistry is dialed in, you're kind of hostage, right? Yeah. But you're not hostage in those early days. And I kind of harken back to VHS and Betamax. Right? Okay. So Betamax, by all accounts, may well have been a better technology. Sure. And VHS won, right?
But not as good at marketing.
And by the way, the same thing happened with CD players. There was, I can't even think, what was the other... there was a
CD and DVDs.
No, there was another competitor at the time when
Blu-ray.
Something, right? So just because the technology is better doesn't necessarily mean it's the one that's adopted. And so I think in terms of some of these other applications, in particular for the broader grid and those storage, I think there will be an element of luck about which.
That's what you said at the beginning. It's timing, right?
Yeah, and you can't control it.
Like this whole industry, some of it won't work. Timing.
Well, I mean, look, you could be really cynical about the mining business and say, as long as you're along anything, when the commodity price moves, like a high tide floats all boats.
Every single expert quotes me that.
And by the way, you can be long the best in class of whatever it is. And when that thing halves, like the stock's going down. I think that's
again the uranium guys.
Yeah,
the
right.
Uranium guys.
So I don't know that you can get away from that. But what I would say is, obviously, that's why people own the equities, because when hypothetically, when gold goes up 5%, the equities go up.
Silver's looking for a pop. Yeah, it's all correlated, but it's all timing as well. Like, Anthony,
thank you very much for having me.
I really enjoyed that. I really enjoyed it. Now, you promised you're going to come back and see us, or we're going to speak to you.
Yeah, when the circular's out, we can't talk about the details.
Because that's an exciting story. I think it's an exciting story. I've told people what I think. I think it should be something people are looking at maybe between now and then. We can help them with find some information to them.
Okay, cool. Thanks a lot for having me.
Thank you. Thanks very much for watching. We hope you enjoyed that. And if you did, please click the button in the corner of the screen to subscribe to our YouTube channel. You can also catch us on our website, cruxinvestor.com, and Cruxcast, our podcast series. Plus, most days you can catch us on LinkedIn and Twitter. We'd love getting your feedback, so please keep that coming, and we'll speak to you again soon.